Hello friends, welcome to my YouTube channel Netaji Tally Education Center. Friends, please subscribe to my channel without fail. Friends, like my video and share my video. Hello friends, today I am going to explain second type of depreciation, that is double declining balance method. In my previous video, I have already explained what is depreciation, what are the types of depreciation called straight line method, double declining balance method, sum of year digits method, unit of production method. Regarding this, I have already explained. Okay, and also I explained straight line method, meaning of straight line method, formula for straight line method and examples for straight line method. Today I am going to explain second method of depreciation, that is double declining balance method. Okay, so in this video you will learn what is double declining balance method. So what is the formula for double declining balance method and examples on double declining balance method of depreciation. Okay friends, first we discussed what is double declining balance method. So go for the notes. Double declining balance method of depreciation, also called as reducing balance method, where asset is depreciated at a higher rate in the initial years than in the subsequent years. Under this method, a constant rate of depreciation is applied to an asset's declining book value each year. This method results in accelerated depreciation and result in higher depreciation values in the early years of the life of an asset. So this is called double declining balance method. So once again, double declining balance method of depreciation, also called as reducing balance method. Reducing balance method means for example, as per the double declining balance method, the formula is 2 into cost of the assets into rate of depreciation. Rate of depreciation. So for example, 1 lakh into 10 divided by 100, that means 10,000. So on total cost of the asset minus depreciation, 1 lakh minus 10,000, remaining balance is 90,000. For next year, the cost of asset is 90,000. That's why it is reducing balance method. Okay friends, where asset is depreciated a higher rate in the initial year. So very beginning depreciation cost is very high than in the other years. Under this method, a constant rate of depreciation is applied to an assets. So in this method, constant rate, for example, 15%, 20%, 25%, but percentage is fixed to every year, applied to an asset declining book value each other. This method results in accelerated depreciation and results in higher depreciation value in the early years of the life of an asset. Okay, so next we move to formula and examples. Suppose a business has bought a machine for rupees 1 lakh. They have estimated useful life of the machine to be 8 years with salvage value of rupees 11,000. Now as per the straight line method of depreciation, cost of the asset is rupees 1 lakh. Salvage value rupees 11,000. The useful life of the asset is 8 years. Okay. First calculate the rate of depreciation. So what is the formula for rate of depreciation? 1 divided by useful life into 100. So in the example 8 years, estimated life of machine is 8 years. Okay, so 1 by 8 into 100, that is 12.5%. So now the depreciation rate is 12.5%. Double declining balance method formula is 2 into cost of the asset into depreciation rate. Here it will be 2 into 12.5%, 25%. Here 2 means double declining. So formula is 2 into. So you multiply by 2. Then it will 25%. As per the formula, first year depreciation is calculated in this way. So 2 into 1 lakh into 12.5% is equal to 25,000, or 1 lakh into 25 divided by 100, that is equal to 25,000. So you can apply any one. Next, so this is the 8-year calculation of depreciation. See here, 1 lakh into 25 divided by 100, the depreciation is 25,000. Book value end of the year, that is 75,000. 1 lakh minus 25,000, that is 75,000. In the second year, the cost of asset is 75,000. On 75,000 into 25 divided by 100, that is 18,750. 75,000 minus 18,750, that is 56,250. In third year, on 56,250 into 25 divided by 100, the depreciation cost is 14,063. 56,250 minus 14,063, the difference is 42,587. So like that remaining year. But in the last year, we consider salvage value 11,000 because on 13,348 into 25 divided by 100, it should come 3,337 rupees. Okay. 13,348 minus 3,337, the difference is 10,011. So 10,011 is less than the salvage value. That's why here we considered 11,000 salvage value for final year of the depreciation. Okay. See here, 13,348 into 25 divided by 100. That means 3,337. 13,348 minus 3,337, that is equal to 10,011. So this 10,011 is less than salvage value of 11,000. That's why we have to consider 11,000. So last year depreciation is 2,348. So finally 11,000 salvage value is there. Okay. So how to enter in tally? Okay. So create one company and create necessary ledger accounts. I will show how to do. Okay. So go for tally. I have already created one company. Now I will create ledger accounts. Select ledger, create. On 1/4/2021, bought plant and machinery rupees 1 lakh by HDFC bank check. Paying by HDFC bank check, GST at 18%. The estimated salvage value rupees 11,000 and useful life of machinery is estimated 8 years. Now you just pass the purchase of fixed asset entry. So that's why you have to create all these ledgers. First one, plant and machinery. Plant and machinery. Under fixed assets. Is GST applicable? Yes, applicable. Set alter GST details. Yes, set to yes. Nature of transaction, select purchase taxable. Nature of goods, capital goods. Integrated tax, 18%. Type of supply, goods, accept. So next ledger, input CGST at 9%. Under duties and taxes, type of duties / tax, select GST, tax type, select central tax. Next one, input SGST at 9%. Under duties and taxes, select GST, select state tax. So next ledger, HDFC Bank. Under bank account. So next ledger, depreciation. Under indirect expenses. So last one, salvage charges or salvage values. This is current assets. Why it is current asset? Because that salvage scrap value is asset till selling to the scrap person. So that's why you have to select current asset group. Okay friends, I created all the ledger accounts and pass the voucher entries. First I will pass one receipt entry because bank ledger will show red balances, negative balances because of that. Rakesh Capital 5 lakh, HDFC Bank 5 lakh. Okay. Now payment voucher. So first pass the entry purchase of fixed assets. Okay. Plant and machinery. So plant and machinery, that is 1 lakh rupees. Purchase of fixed asset is not a regular purchase. Don't enter in purchase voucher. So here you are purchasing plant and machinery by paying HDFC bank check. This is a payment. Suppose they are purchasing on credit, then it will journal because that is adjustment entry. Okay. Press D for one more debit entry, that is input CGST 9,000. Press D because one more debit entry, input SGST 9,000. HDFC Bank. Okay. Friends, depreciation entry is start from 1st May. Here I can't to show 8 years transaction in one company. One company means business in what I created company in Tally. So that's why I am taking here every month is a year. You just assume that every month is year. But here I can't show 8 years transaction till 2029. 1/5. Press F2, change the date. Journal voucher. Depreciation 25,000. First year 25,000. Plant and machinery 25,000. 25,000, 25,000. So next on 1/6, that means that is next year 2022, like that you just assume. Depreciation F2 1/6. Depreciation for second year 18,750. 18,750 plant and machinery. Okay. So next 1/7. Depreciation 14,063. 14,063. One eight. 10,547. 10,547. Change the year. Year means month. Seven nine one zero. 7910. Plant and machinery. So next 110. 5933. 5933. 11. 4,449. Depreciation account data to plant and machinery. 4,049. So next year, I think it is final year. 2348. So this is the last year depreciation. Now check the report. Display accounts book, ledger, plant and machinery. Change the period 15 to 112. See here, total 8 years. 1, 2, 3, 4, 5, 6, 7, 8. So the final balances of asset is 11,000. This is the salvage charges. That means scrap value. You adjust this scrap value and close the machinery account. Escape. Go to voucher. Change the date. Salvage charges 11,000. Plant and machinery. So now machinery account is closed. So check it in ledger. Display more reports, accounts book, ledger, plant and machinery. Change period, press Alt F2, 15 2nd December. See friend? So machinery account is closed after 8 years. Okay friends. So in this way you have to calculate, you have to enter in tally about double declining balance method. Okay friends. In my next video I will show sum of year digits method. Okay friends. Thank you for watching my video.